All right, it's 8:15 a.m. Central Time on Monday, January 29th. We haven't done one of these videos for a while, so I thought we'd do another Vulcan Trader pre-market prep video. Now, today the short-term bias is neutral. We have Microsoft, AMD, and Google reporting earnings tomorrow afternoon. So the expectation for today is for the market to continue balancing within the recent range. And the likelihood of a sustainable breakout above 49.34 quarter is relatively low. So as long as we're not seeing any clear signs of initiative buying, so that means as long as we're not seeing any excess strength or big and sustained upside momentum, we can anticipate sellers being active at the resistance zones above. And on the upside, we have pre-market resistance at 49.20 quarter to 25 quarter, and then the initial resistance zone is at 49.28 quarter to 34 quarter. So the first thing we're going to do is set up a short at 49.28 quarter to 34 quarter, and on the downside, we're going to target a move into the pre-market support at 49.13.5, and the final target is going to be the initial support zone at 49.03 quarter. So this looks good as is. For the pre-market resistance zone, we are going to make a copy of this zone, and we're going to have two options here. On the first one, we're going to place our stop just 2 ticks beyond the recent high. So we're going to make our stop 34.75. And on the downside, we're going to target the RTH low from Friday, and the high probability target can be the initial support zone. So in this case, our entry is going to have to be 26 quarter, and that's only to get 2-to-1 reward to risk, which is still a healthy R multiple, but of course, if we can get 3R or more, then all the better. So this is going to be one option to short. This is a more conservative play. And then in the event that we're seeing very obvious signs of intraday weakness, where it would make sense to get involved at the pre-market resistance zone, well, then the more aggressive entry is going to be within the pre-market resistance zone with our stop just 1 point beyond that zone. And in this case, again, we'll set our high probability to 07.5 and our final target to the initial support zone. So an entry at 49.22 would give us 3-to-1 reward to risk if our stop is just 1 point beyond the zone. So that covers us on the short side. And in the event that we do break out above 34 quarter, it's less likely that it's going to be a sustainable breakout. So I'm open to shorting the resistance zones above, with the caveat that we're not seeing trend up conditions or clear signs of initiative buying. So all of these short setups are going to be dependent on that condition. As long as we're not seeing big and sustained upside momentum and excess strength on the advanced decline, or some significant strength coming into the NASDAQ, as long as we're not seeing any of those conditions, the short side should be okay, especially off the initial resistance zone, or at least with our stop above Friday's high. And in the event that we are seeing very clear signs of initiative buying, that's when we'll have to skip the short ideas. On the downside, we have the aggressive area of support at 07.5 to 13.5. Since this is the more aggressive area of support, we can set up a long there, but in order to execute it at such a high price, we would need to see very clear signs of broad market strength and sustained upside momentum. So there needs to be a valid reason to consider buying and entering long at such a high price, because in order for that idea to work out, we need to see some pretty decent upside here. So in this case, we are going to set the high probability to the back of pre-market resistance, and we'll set the final target to the initial resistance zone. So we'd need an entry of 49.11 to get 3R. Like I said, this is the most aggressive area of support, so we do need to be cautious there. The more reliable support is going to be at 48.93 quarter to 49.03 quarter, and then the more significant support is 48.89. as long as we're holding above 48.89, the market would still be balancing within the recent multi-day range. So we're going to make a copy of initial support, put our stop just a couple of ticks behind 89. So our conservative entry is going to be at 94.75. And then if we're just leaning on initial support, then the entry is 97.5. I think the targets on the upside are perfectly fine as is. We're going to target 49.16 quarter. That is a couple of ticks ahead of the high volume node. And then the final target can be pre-market resistance, so that's okay. And we can also set up a long at 89 to 91. And keep in mind that I'm not executing all of them. I'm going to pick between 94.75 and 97.5, depending on how the market approaches that zone. For example, if the move is originating off of the 49.1675 area and the market is quite exhausted into initial support, in that case, I might take 48.97.5. But if the move originates off of 49.07.5, for example, well, then I might wait for 48.94.75 or maybe even 92.75. So those are decisions that will need to be made in real time. And today our short-term bias is neutral, which means we have to be more dynamic and aware of the real-time intraday situation and then make adjustments as needed. So just wanted to clarify that I'm not trading each of these prices. I am going to pick one of them and then probably just take that one trade setup on the long side at one of these prices somewhere around initial support. Now, we are still in an overall bullish environment, so in the event that the market heads lower into 48.72.5 to 82.5, the expectation would be for at least an intraday bounce. Now, by that point in time, the day's bias will already have been quite established and it will be bearish at that point in time. So we don't want to shoot for too big of an upside target. I think in this case, we're just looking for a nice intraday bounce. So the high probability target makes sense to just set it at 93.25. And the final target, we're just going to make 4,900. And we can see that we would need a 76.5 entry in order to get 3-to-1 reward to risk. So this is going to be a pretty safe play. First time down, if anything, I think the market may not fill 48.76.5. And again, if the market's exhausted into that zone, we may need to get a more aggressive price. So we may need to jump in at 78.75. And I think that should cover the trade setups for today. So one thing to note is that there aren't too many trade ideas. There's basically one short idea at resistance, and there are essentially two potential long setups at support. Remember, I'm picking one of these prices, and that's going to be my attempt on the long side. And if it doesn't work, I'm down 1R on that whole trade idea. And then the second attempt on the long side is going to be at 78.75 or 76.5. And again, if I'm wrong, I'm down 2R on the day. So the nice thing about pre-planning and really thinking through the trades in advance is that you know what your worst case scenario is. So going into the day, you don't have to be thinking that you're taking any excess risk. I think it helps with hesitation where you can execute more decisively because you already know what the downside is. So in this case, if I take, let's say, even 3 trade setups on the day, and let's say none of them work, I'll be down 3R, which is not really a big deal. But the more likely scenario is that one of these trades will work out, and the one that works will pay 2R or 3R, and the one that doesn't will be a loss of 1R. And if even just one of them work, that's more than enough to cover 2 or 3 losses. So that's really the way that you can get consistently profitable. It's not about shooting for a 80 or 90% win rate. It's really about identifying high quality setups where your reward to risk is at least 2R, so 2 times your risk, if not more. Ideally, you want to get 3-to-1 reward to risk out of your day trades. And in the futures market, even though you can at times get 4, 5, or 6R out of a winning setup, the more common outcome is going to be a winner of 2 to 3R, maybe 3.5R on the upside, and then the downside is always capped at 1R. So this is really the more realistic way of becoming profitable rather than trying to chase accuracy and trying to be right on your ideas a very high percentage of time. With a high reward to risk methodology, even a 50% win rate can mean that you are consistently profitable. So we'll wrap it up with that. The market is about to open in a few minutes here. Hope you guys all trade well today. Good trading, and I'll catch you in the next one.